Good morning. Welcome to the XM.com weekly market update. And we're joined once again by Peter McGuire from XM. Pete, welcome back.
Good morning, Andrew.
Plenty of movement overnight.
Yep.
Plenty of activity.
Sure has been.
Let's start on the domestic front. We had the inflation numbers out last week.
Yep.
7.3%, which was not unexpected, but still a big number.
Still a big number, and it certainly has hit everyone between the eyes because we're playing catch-up in the sense of how aggressive Eurozone and US are. So maybe we're really going to rally hard in the next month or two with our reads. And I know that we're running every month versus every 3 months as far as reporting. So, yeah, are we shooting for 8% come October?
Well, that's what the RBA is anticipating. Time will tell, but as you say, they get a much better guide now with the monthly figures coming out, which
100%.
makes a lot more sense.
Yeah.
On the back of that, obviously, we had the RBA rate decision early in the week. They only went 25 points, which was more or less expected again, but probably plenty more to come.
Yeah, absolutely. Again, we're well behind the curve as far as Fed Chair Powell coming out overnight. We'll touch that in a sec, but 75 and ECB 75, so they're both at 10 plus.
So let's head up to Asia. Japan. This is the differential between the 10-year bond in the US and Japan, which is roughly close enough to 4%.
Yes.
It's been like that for a long time, but the Japanese, they're just not moving their interest rates at the moment.
No, they're not, and that's been demonstrated by the value of the yen, and as you've seen, it's just cratered. So where we were and where we are now, from that 110 handle all the way through to 150, intervention and so on. Yeah, aging population, all of those discussion points that everyone said in the 90s and the 00s as far as Japan, well, it's all coming home to roost.
Yeah, and that's probably, I guess, one of the first economies heading down that path, and there's probably other economies will probably head that way in the coming decades.
Yes, very much so. China being one with a one-child policy.
Interesting moves up there as well.
Yeah.
On the yen as well, in Japan, that consumer confidence, basically anything below 50 is not a good number.
No.
Or a contractory number. So sitting there at just on 30.
Yeah, exactly. Well, when you're at that 30 handle and lower, it's certainly not good. And they've got some big problems ahead of themselves.
There's a lot of headwinds up there.
You bet.
Yeah. Over to the Eurozone. Once again, it's not a good looking chart there. So the GDP growth did come out. It was 0.2% positive, which I think anyone would take a positive number at the moment.
Yep.
But it's still pretty flat from an economic perspective.
Yes, exactly right. And we all understand the value of the euro, how they are running as far as they want a 10.4 was an analyst expectation for inflation. They hit 10.7. So that was worse than expected, and Powell probably took that in line. If you were at 10.2 or 10.1 for that inflation read, then possibly they might have thought, well, we've seen the peak. We had 3 Baltic states above 20%. You had Germany, the economic powerhouse, at 10.4%. So yeah, it's bleak and it's not looking good at all for Europe.
No, and that's this chart shows it here with the Eurozone inflation number sitting at 10.7. It's a really steep rise from mid 2021. So
yeah, you would call that, Andrew, parabolic.
And how they deal with it, well, it's
how they deal with it worries the equity traders as far as what Powell's comments were, that it's too early and it's certainly premature, his words, not mine, to take their foot off the gas. They'll back it down to 50 probably next, or maybe they hit another 75. But they've got, if he wants 2% inflation, Andrew, then the only way you can do that is take your interest rate above your inflation rate. And God help us if that's the case.
Yeah, it'd be very surprising if they got that aggressive. But,
well, that's right. Well, time will tell.
Maybe we're going to be in an era of living with higher inflation for quite some time.
Yeah.
And the central banks just live with that until it works its way through the system.
Yeah, but you'd want to get certainly some big pay rises to manage that.
Well, that's right. That's the wage equation comes into play there as well.
You bet.
US, just quickly look at the 10-year bond. It's roughly around 4.1. The high is 4.25, so it's not far off that.
No.
And obviously it had the rate rise as well.
This morning.
Exactly. So another 75 points there, which once again was expected.
Yep.
But
it'll move that up.
Yep. And that and the two, that's obviously going to head up.
Sure.
Probably closer to that 4.5 mark fairly soon. Finally, just looking at new home sales, which is an interesting figure, this, because the Fed is looking, and like a lot of the central banks are looking at some of these numbers now, some of these stats, and some of them are actually coming off substantially as the interest rates work their way through the system, and that does take quite a bit of time
Yeah.
to really make the impact that they need.
Well,
But we are
repricing.
seeing it. We are seeing it in some sectors already.
Well, exactly, and that's new home sales, as you can see. But used home sales, or existing home sales, they call it, down 23.5%. So yeah, that's quite frightening for anyone who's from the realtor sector. They're expecting 100 sales, but they only got 77. So that makes a really contracted market, and the exchange costs, as far as high inflation, it gets to a point that we've just got to see how that moves forward with the existing, not only home sales, but the existing growth profile of all these real estate assets.
Yeah, and it's the property market is very interesting as well. If you get new home sales and existing coming off at quite a fast pace, that flows into so many other industries. It flows into your furniture and your white goods and a whole range of sectors, which then, that brings them off as well. So, which is obviously what the central banks want, but there's a lot of pain that comes with that.
Oh, well, people that, you're expecting to work 40 hours this week and you only need 15 because you haven't got the people buying the white goods.
And I guess the last number, which is the employment, which we've talked about a lot in the last couple of months, still very strong in most countries. And that's not changing just yet.
Not yet.
But
it's a lagging indicator.
That might be one of the final ones to
really capitulate.
Yeah, potentially, yeah. But anyway, plenty going on once again. It's going to be pretty interesting last couple of months of the year leading into Christmas.
Well, Dow is down 1.5%, S&P 2.5%, and 3.4% down for the Nasdaq, and Australia's down 1.5% at 10 minutes into the market.
Yeah.
So that's a wake-up call for Asia.
I know, certainly a lot going on.
Yeah, India meets today, Indian central bank, because they're waiting to see what Fed Chair Powell is doing. And you can't sneeze at that little economy anymore because it's number 4 or 5 in the world. So it's a monster with 1.3 billion people. So let's see what India is prepared to do moving forward as far as interest rates also from their Reserve Bank.
I know, plenty going on.
You bet.
All right, Pete, thanks for coming in again.
Good to see you.
Okay, and that's the xm.com weekly market update.